it's so disappointing that this is what we get out of our opposition. And unfortunately, the Liberals are like, their responses are kind of like, it's okay. Don't worry about it. It's okay.
Just look the other way.
Whatever.
We're not going to make a decision. We're going to waffle in the wind.
Welcome back to Poutine Politics, Canadian issues served with cheese curds. My name's Adam.
My name's Mike.
And before we get started, actually.
Oh, God.
Before we get started on the actual topic, a couple of quick little notey things.
Okay.
So, first of all, the financial world is coming to an end. Again, kind of, sort of, maybe.
Because you're inverted yield, yeah, whatever.
No, honestly, it has nothing to do with that. It has, like, this is the thing. It's like, we made that episode about the recession, which hasn't come out yet, and probably won't now, because it's totally irrelevant to the situation now. But yeah, the fact that all of this is happening because of the whole coronavirus thing. And it's like, oh, well, I mean, I guess I was kind of wrong.
Okay, listen. The coronavirus is not as bad as SARS, and SARS was not bad.
I think time will still tell on that. I think it will. I love how I did a facial gesture on a podcast, like as if people can see it. I know, but I try. Hey, by my tone of voice, people will be able to tell. And it's
God damn it, I'm an idiot.
What I would say is, I mean, obviously the effect in North America as a whole is much smaller than SARS. But if you look at the numbers in regards to the disease at a similar time frame as SARS, I believe that this is technically worse in the case of virulence, but not necessarily in the case of mortality, right?
No.
You don't think so? I don't know.
SARS
was like 17 years ago. So
I saw a graph that said it wasn't. So I believe the graphs. Graphs do not lie.
60% of the time, it happens all the time. All right. So anyways, financial markets in the States took an absolute rump kicking. Like I said, I feel like that episode that I was talking about, the potential recession, is probably off the shelf now, but I might do something with it.
All right.
I might put it up on our Patreon page.
Oh, okay.
And so if you're a Patreon supporter of the show, you could listen to that episode uncut, along with many of our other episodes. Uncut, exactly. You can hear all of our thoughts on things. And all it takes is a small monthly donation. We thank you in advance.
And we will thank you.
We will thank you, but we'll get there.
We'll get there.
Okay. So anyways, on to the actual topic at hand. February 19th, 2020, the Financial Accountability Office of Ontario released a report called Tax Expenditures. Now, I'm assuming that other provinces must have similar departments and similar, non-partisan groups that look at these kinds of things. But because this one was prevalent in the news recently, I'm like, okay, let's take a look at this. Now, I am going to give a plug, not that it really needs it, to The Agenda with Steve Paikin, because I was listening to that podcast and heard a little bit more about this report, and I'm like, that sounds interesting. Let's talk about it.
Yes.
Because they didn't go like into the weeds.
No.
And I'm the kind of guy that kind of wants to go into the weeds. Before we were recording, Mike and I were talking about this. And for instance, in Ontario, the projected cost for tax expenditures for the 2019-2020 budget year is $44.4 billion in spending, which, if tax expenditures was a section of the provincial budget, would be the second highest sector of the budget behind healthcare and ahead of education.
Yep.
The reason why it's not is because it's split up amongst all the different ministries and departments and things like that. So obviously you don't necessarily see a lot of this stuff because it's hidden's not the right term, but I guess kind of hidden amongst different ministries.
Hidden, amalgamated.
A lot of it is also administered by the federal government, but it is tied to Ontario because it has to do with the provincial part of your income taxes or the provincial part of corporate income taxes or the fact that the federal government administers the HST.
And what is a tax expenditure in plain English?
A tax expenditure is either a credit that the province gives to people to reduce their taxes or also potentially a deduction that the government gives based on something that you do to pay less taxes. Mm-hmm. Okay. A lot of it is not necessarily that it is money going out per se, but it's just less revenue that the government receives as a result of credits that it offers.
So
Okay.
a subsidy.
Yeah, you could look at it as a subsidy. So to give an example, I guess to give an example of the two. So a tax credit in Ontario would be the Ontario sales tax credit, which is part of the Trillium benefit. A tax deduction is something like the basic personal exemption on your tax return, which is actually like the biggest one or one of the biggest ones. So I'm going to get to that. So there are 149 different tax expenditures in Ontario. About 50 of them, 49 of them are controlled by the federal government because it has to do with personal income tax, corporate income tax, and HST, which, like I said, is all administered by the federal government. The problem is, or part of the problem is, that the cost of these tax expenditures is increasing faster than program spending.
Nice.
Yeah. So over the last 8 years, tax expenditures have been increasing by 4.4% per year, where program spending has been increasing by 2.6% per year. So we're spending more money on giving, for lack of a better term, like you said, subsidies for taxes in comparison to increasing spending on healthcare, education, justice system, things of that nature, right?
Right.
So we're giving more tax breaks instead of spending money on services.
Yep.
Okay. How do you feel about that? Because I know how I feel about that,
So-
and I do taxes.
I feel I've come aware of certain things since I've been doing this podcast. One, I've never been a big fan of welfare, generally speaking. And now when I say welfare, people are like, oh, you mean like the people that don't want to work and they just want to take money? That's part of that. But I'm talking about corporate welfare too, where if your business can't survive on its own, guess what? Your business shouldn't survive. Right? Like, I'm not a big fan of bailing out corporations as much as I'm a big fan of bailing out people.
Right.
I mean, that might be a harsh line for as far as people go, but I mean, I can't. That's just how I feel.
Yeah, I know. And this is why the thing, let's say like out in Alberta, the big thing that the NDP in Alberta are nailing the UCP about is the tax breaks that were given to corporations. And now a fight that's happening that I saw very recently on Twitter is one of the MLA, like the UCP MLAs, is saying, oh, like professionals are saving a lot of money because of our job creation tax cut. Never mind the fact that job creation tax cut that the UCP created does nothing for those professionals because most of those professionals are small businesses, and the tax cut is only for businesses that have profits over $500,000, which is not classified as a small business in Canada.
Yeah. Like, corporate welfare is not something and I'm not trying to pick on small businesses by when I'm saying that. I just mean that if you're going to get a tax break, it should be something that everyone should have an equal playing field, basically, right?
Yep.
I understand that there's tax credits for different things, but I mean, after looking at a bunch of different things as far as taxes go, I've come to realize that what governments get from taxes is much different than I originally thought. Like, I thought that, like the highest earners paid the most in taxes. I'm not as certain about that anymore.
Yes. Okay. So I'm going to get to the corporate welfare part of it.
Okay.
But we're looking at this $44.4 billion. So let's look at some of the breakdown of it. Okay. So $17 billion of these expenditures are distributed as benefits to families. Now, who do you think benefits the most from this?
The upper echelon.
Right. The top 20% earning families in Ontario receive 43% of the benefits of that $17 billion. And the top 20% earning families, so this is family earnings, not individual earnings, is people earning, or families earning over $123,400 a year.
Yeah.
Are receiving 43% of the benefit.
Yeah. And this is the boutique taxes and things, tax credits, things like that help.
You know what? Most of that is not the boutique tax credits, actually.
Then how are they getting the tax credits?
So where they're benefiting from the most is certain tax deductions. First of all, so RSP deductions. Okay?
Right. Yeah.
People that are contributing to RSPs are generally higher income.
Yeah.
Generally speaking.
Yeah.
Pension plan contributions, because those are a tax deduction just like RSP contributions are. And generally speaking, the people that are paying into pensions are higher earning. Okay. The third thing is partial inclusion of capital gains. So the fact that capital gain, only 50% of capital gains income is taxable.
Yeah, that's crap.
Yeah. Yep. And deduction of carrying charges incurred to earn income. So say you borrow money to invest in the stock market and you can write off the interest that you're paying, right?
Of course you can.
Right. So just of those 4 deductions, 75% of the benefit of those deductions go to the top 20%. Okay?
Well, yeah.
Which is not a surprise because generally speaking, those are the families that can afford those kinds of things.
Yeah.
Now, the interesting thing too is that because that top 20% is families earning $123,400 per year, that really means that technically if both spouses, let's say, had a similar paying job, each of those people only needs to be making a little over $60,000 a year, right?
Right.
So it does kind of go to show that it's not necessarily that it's out of reach per se, but obviously a lot of work in this province is moving towards the service industry, which in a lot of cases is minimum wage.
Yeah.
In regards to the tax credits, the top 20% are earning the most benefit from Canada pension contributions. The more income you make, the more you pay into Canada pension, and you get a tax credit for it. Charitable donations, okay, because obviously people making higher income are making more charitable donations because they can afford to.
Yep.
The third thing is that basic personal exemption.
Yeah.
The largest percentage of people that benefit from the basic personal exemption is the people in the top 20% of earning in the province. And part of the reason of that is when you look at the people that are in the bottom 20%. So the families in the bottom 20% are earning less than $25,100 per year. The basic exemption for Ontario is around $10,000 a year. So when you take 2 people and you take $25,000 and divide it in half, that's $12,500.
Yeah.
Those people have little to no benefit from the basic personal exemption. Someone who's in the top 20% is fully benefiting from that credit and can potentially fully benefit from that credit in multiple ways.
Mm-hmm.
So the things that the lowest tier of people, like the lowest 20% benefit from, are things like the Trillium benefit. So the sales tax credit and the energy and property tax credit, because they have lower income, they maximize those credits.
Yeah.
But the problem is that those credits are from a money perspective are relatively small potatoes in comparison to things like the Canada pension credit and RSP deductions and charitable donations, right? So, some people would look at this and say, well, it's kind of understandable that, a larger percentage of the benefits should go to the people that are making more money because they're probably paying more taxes.
The interesting thing, and it's something that I would love. No, I'm going to do it.
Go ahead.
Is to figure out how much benefit each demographic gets, so to speak.
Mm-hmm.
So, yeah, sure, you're paying more, let's say, in the top 20%. Yeah, they're paying way more in income tax per year.
Mm-hmm.
Okay. But then again, they don't get taxed as heavily proportionately at the gas pump, getting groceries.
Yep.
All of those consumable taxes.
Yep.
Because they have more money. Like if you're getting paid, you're paid $100 in taxes because you're making $200,000 a year. You're making $1,000, or let's say making 100, or you get charged $100 in taxes compared to $50 in taxes. Yeah, that you're getting charged more, but that $50 out of $100 is huge. That $100 on $10,000 is minor.
Yeah.
Right. And that's the thing, that when people compare taxes, they compare about personal income taxes.
Yeah.
Not every other tax that hits them.
And it is probably the every other tax that should be looked at, I think, in some ways, because those things affect people on a daily basis.
Yeah, you should be looking at every tax when you're calculating what is somebody who's making X number of dollars, how much are they actually bringing home, so to speak.
Right. Like groceries would be a hard thing to compare it against, just simply because a lot of groceries are zero rated. There's no tax on them,
like
right?
Consumables,
gas for a vehicle, right? I mean,
clothing,
right,
things like that.
Generally speaking, like if you take 2 families that have, say like a similar level of not activity, but you know what I mean? Like like obviously, let's say a family that makes more money probably can do more leisure activities and certain things like that. But let's say, they live equidistant to work. So it's like they drive the same amount of kilometers and stuff like that. But one person's making $100,000 a year and one person's making $40,000 a year. And they have the same vehicle and they're filling up the same amount of gas. The taxes that are being paid on the gas are going to affect the person more that's at $40,000 than the person that's at $100,000.
Right. And that's something that doesn't really get looked at. And it'd be something interesting to look at because I'm a person who likes this kind of pain. So I'm going to do it.
Like I mentioned before, there are 149 tax expenditures in Ontario.
Right. Mm-hmm.
So one of the other big problems, apparently, is that the majority of these tax expenditures don't get reviewed often, if at all.
Right.
So there are apparently it didn't break down which ones in particular, but it says only 15. So we're talking 10%. Of these expenditures, which also only makes up like 3% of the dollars, 1.4 billion of 44.4 billion, is something that gets reviewed on an annual basis because they're tied to program spending that has to go into the budget. $43 billion of these tax expenditures don't get reviewed on an annual basis. They just keep happening. And in some cases, these are things that have been around for 30, 40, 50 years that they just never get reviewed. It's like, okay, like the basic exemption. It gets indexed to inflation. That's in the wording of the rule. And obviously, someone has to figure, okay, how much is inflation? Here's how much the number is going to be. Unless a party introduces something to make a change to that exemption, like the Liberals just did for the federal basic personal exemption, nobody looks at it. Right?
Listen, it's a perfect system. Don't wreck it.
Yeah.
Government.
I work in it every day. I know it's not a perfect system, all right? Fabulous. Fabulous. Yes, it's amazing. There almost needs to be more oversight on this by the government, right? There needs to, sorry, hold on. There's one other thing in here because it's like one of the things that governments decide to do is that rather than making a change or adding a new program to spend money on, they'll make a tax expenditure because it doesn't cost as much money to implement and it's less complex. However, it makes the tax system more complex.
Yeah.
Because filing a tax return, I will admit, for most people, you get a T4. Filing your tax return is not that difficult.
No, it's
not.
It
can, if you don't know enough, it can be difficult enough. And that's why people go to companies like H&R Block or some people, right?
There's a misconception that it's harder than it is.
Right.
That really hurts because if anybody would explain what they have to do on it, I'm like, you literally have to add up numbers.
Yeah.
And the weird part is I don't understand why, at this point in age, we're still doing it manually. Why isn't the government just taking care of it?
Well, there's countries that, in England, it's all done automatically. I think unless you have a small business, there's certain things that small businesses have to do, but
there should be exceptions on certain things. But for the most part, I should be filling out the exceptions. I shouldn't be filing my taxes.
Yeah, I agree.
For the most,
the government already has your T4. They already have a copy of it.
I don't understand why you want me to do the math for it. You want me to sit there and add it up, and then if I make a mistake on it, I'm in trouble for it. It's like, listen, you have a computer system, use it.
Yeah, exactly.
Thankfully, and we're scared half to death because if we did it wrong, we're screwed. I'm not going to take it to a tax professional and get charged.
Yeah,
$100. It'd be $100. Nothing against tax professional. Cough, Adam. And
thanks, man.
they're there to make money. I understand why they're there, but
Yeah, so so obviously the three largest categories when it comes to tax expenditures, one is personal income tax at 21.1 billion, so it makes up almost half of the number. Two is sales taxes at 13 billion, and third is corporate income tax at 6 billion. I was actually surprised that the corporate income tax expenditure was that much lower than the personal income tax, but I get that there's obviously a lot more individual taxpayers in the province than there is corporations. Right?
Yeah, and it'd be really hard to really jack that up because people would go up in arms if,
Now, the interesting thing, though, when it comes to businesses, and it comes to, say, that corporate tax being $6 billion in tax expenditures, the number one line item under that is the small business deduction, which is a reduction of income tax rate for small businesses with profits under 500,000. It's good because a small business, I feel like a small business corporation, because again, like I've said before, the problem with government language is that small business deduction does not mean every single small business. It's only people that have incorporated businesses. Very specifically, your sole proprietor, hairdresser on the corner, or something like that doesn't benefit from this credit. Okay?
Nope.
It's just corporations. I'm glad that they have that benefit because it does kind of help spur economic growth, at least for small business. But it probably shouldn't be, like the small business corporate tax rates probably should not be as low as they are. Like in Ontario, I think it's 3%. That's for the provincial tax on that corporation. The federal tax is around 9. Yeah, actually, sorry. So the federal is 9 and the provincial is 3.5. So in Ontario, a small business corporation pays 12.5% on its profit, up to 500,000.
I think one of the big problems, there are very smart people out in the world that spend the time to figure out the numbers on things. Like, and all you need to do is look at insurance, the actuaries that do that.
Mm-hmm.
If we got those people to review our tax system to see the benefits and to actually do a proper analysis, why aren't these people? Oh, I'm sorry.
Because they know better. They know better than to get involved with government.
Well, no, I'm not saying that.
Okay.
I was like, why don't they do this? I'm like, oh, because then they couldn't give their cronies the money they need. Really, that's what they should be doing. They should be using people that spend their lives crunching numbers. Like insurance actuaries are so good at their jobs because that's all they do is crunch numbers.
Right.
So why aren't we getting these people to do the financial analysis? That mindset doesn't necessarily have to be those people in the fields or anything like that, but we should be having those people. Those are the people I want to turn to whenever I'm like, should we raise taxes on corporations or should we lower them? Is this beneficial or is it not? That's where I want to get the answers from.
Right.
Not from Doug Ford.
Well, and I think that's kind of what the Financial Accountability Office is supposed to be.
Yes.
Because it's nonpartisan. But the problem is that, I mean, they're not making policy. They're providing information, and then it's like, okay, hopefully the government takes this and makes policy with it. But that can become dangerous because, like, we look at these kinds of things, and it's like, well, to eliminate a lot of these tax expenditures would involve spending a lot of political capital, would be extremely unpopular, and would potentially involve the party that puts them in place, or pulls them away, I guess, from not winning the next election. And this is part of the problem with our electoral process and politics in general, is that it's always about winning the next election. It's not about doing what's right.
Well, there's a caveat. It's either winning the next election. I call that the liberal way, or it's I do.
Yeah.
Or it's I can give my friends money the PC way.
Yeah, the conservative way.
Right? Like, let's understand, there is a difference. The Liberal Party's like, how do we get elected again? People like this, let's do this.
Let's do that.
Yeah. So when the PC Party does the things that they do, it's to benefit their corporate crony brothers, right?
Yeah.
So, yeah, and that's where I want to see. Like, I want to know the numbers, but nobody can give you the numbers, which is insane to me that they don't have the numbers and they're not basing policy off of facts.
Yeah.
Numbers. There's people that you can't predict the future. I'm not going to deny that. But there are people that you could reliably use. And we have the computing power now, especially, to do the analytics on it, to find out what works.
So
use those people.
Yeah, exactly. So if there was one thing that, just kind of based on these figures, if there's one thing that you would change, what would it be?
Get rid of Doug Ford.
Okay, I meant like from a taxation perspective. Get rid of Doug Ford.
Tax Ford so you can't get out of the... if there's one thing...
Because when I mentioned, I mentioned the capital gains, the inclusion rate on capital gains. Yeah. And that was kind of one of those things that you were like, yeah, that's an issue.
One of the capital gains has always been a thing where I'm like, really? The ways that the rich can circumvent paying taxes is the way I would do it.
Right.
And I'm not talking about RRSPs. I'm not talking about TFSA, because those do benefit people more generally. But the capital gains, come on.
Yeah.
It benefits only one group.
Pretty much.
And that whole realm, I'd like to get rid of. And the only other thing would be the corporate welfare. I'm tired of corporate welfare.
Yeah. So I'm totally with you in regards to the capital gains situation because, well, a case in point is the fact that, someone who is on like a board of directors or like a CEO or something like that of a major corporation can take a huge amount of their compensation in stock options and things like that, and it makes it less taxable as a result. But the corporation can get a full write-off for that expense. So it's almost like a double whammy in that corporation ends up paying quite a bit less in taxes because it gives those stock options. And then when the stock options get realized, they're capital gains and they're only claiming half the income.
And on top of that, then the corporation that gains gets the money back from a corporate subsidy also then buys back those very same stock options.
Yes.
So then they can, yeah. That never makes me happy.
Now, from a personal side of things, what I would do is what the federal government is implementing with the changes to the basic exemption, where above a certain income, the personal exemption shrinks to the point that, so I think with the federal one now, it's like if you're above 150,000, it starts to get basic exemption starts to get smaller until the point that if your taxable income is at like 250,000, you have no exemption.
Ooh, make it a progressive tax system?
Right. It's right. Exactly. An actual progressive tax system. So
like everything else should be?
Right. Putting something similar in place that, above a certain income, that basic exemption starts to get smaller because all of these tax expenditures, $44.4 billion is what they're projected to cost for the 2019-2020 budget year. The basic personal exemption credit on its own is $4.7 billion. It is 10% of that number on its own.
Actually, I'm going to correct my exception to the tax system would be estate taxes. Tax the hell of them.
I was surprised, and maybe not surprised. Estate administration was like basically zero. It's a lot. It's one of the tax expenditures, but it's like nothing. I was surprised by that. So it doesn't cost much to administer the estate tax, but the problem is that there's really not a lot of estate tax being collected.
No,
probate fees are very small.
No, I think that even though I do have insurance policies on both me and my wife, and I'm glad I have them, I think that the tax rate on those should be much higher because
yeah, whereas right now there's zero.
Yeah. There should be much higher on estate tax, things like that, just because your kids didn't earn the money. Frankly, I understand wanting to leave money, but you're not leaving them with, no matter what you do, you're not leaving them with nothing.
Yeah.
They didn't make it.
Right.
And I want to encourage people not to put money towards their kids. I want to encourage them to put it towards the economy.
Right. Well, I guess except for like the registered education plans or something like that. But I know what you're saying. Like, you don't want people to keep like a huge nest egg for when they die.
Yeah.
Right?
I'm not talking about RESPs, not talking about not retirement plans or education plans. I'm talking about...
You're talking about estate
plans.
Yeah.
And I don't mean life insurance plans because, when I don't have this massive $1 million plan.
Right.
Right. I have enough to cover funeral expenses. And once you get to a certain point, if your estate is larger than your yearly income, that's where I'm talking.
Okay.
Like if you're making $50,000 a year and you leave $50,000 for your kids, well, whatever.
But if you're making like $100,000 a year and you leave
$3 million
or
right. Something like that,
okay,
right? Because then it encourages people to use that money when they're alive, rather than pass it on to the kids that don't do anything with it and don't contribute.
Now, I think the argument against that, devil's advocate, because I agree with you. The argument against that would be you do get taxed on the income that you earned to make that investment. You do get taxed on that investment when you pass away because there is a deemed sale of whatever the investment is.
Yep.
And so to then tax it again before passing it to the kids does feel like 3 potential levels of taxation before passing the money on.
Boo-hoo.
And that's why I said, I don't disagree with you, especially on certain sized estates. But yeah, like you said, if it's like a $50,000 life insurance policy, well, that's one thing. But if it is like a $5 million, investment that gets passed on to these kids, then yeah, there should probably be something done about that beyond 1.5%, which is what probate fees are. Anyways, so if you're interested in reading more on the report, I'm going to put the link in our show notes as well. A couple of things that I didn't get to is in regards to a couple of the new tax credits this year, which is the Ontario Child Care Tax Credit and what's called the LIFT, the Ontario Low Income Individual and Families Tax Credit, because these are two items that are actually causing tax expenditures to go up for the 2019-2020 budget year. So I'm going to put links to some explanations of those in the show notes as well. This has been Ontario Tax Expenditures. My name's Adam.
My name's Mike.
We're going to talk to you soon.